first off, tell us who you are, what you do, and where we're sat today.
Yes, my name is Suresh Mistry. I'm Head of Sustainability and a co-founder of Alquity Investment Management, and we're in our offices in London this morning.
For someone who doesn't know anything about Alquity, if you can give us a kind of 1 minute nutshell of what it is that you do.
Alquity are a responsible investment manager. We've been around since 2010. We have a series of funds that invest primarily in emerging markets, but also now a global equity strategy. The premise of the organisation is we invest for returns, but we also deliver impact through our own programs called Transforming Lives, and where we donate 10% of our revenues, not the returns from clients, into projects helping some of the most disadvantaged people help them improve their lives. By doing that, we're helping improve those economies. And if we improve those economies over the long term, that will help the companies we're investing in to deliver better returns. We call it the Alquity Virtuous Circle.
I like it. That's really, and that's quite a substantial amount as well. You've got to say. Tell us a little bit about the fund range that you have, and then we'll talk about VAM separately. But just tell us about the fund.
So the Alquity fund range consists of 4 funds. The Alquity India Fund, which is focused on domestic growth in India, with a small cap focus and has been top quartile now since inception. We also have our Alquity Asia Fund, which takes that same premise of that domestic growth in Asia and plays that out across the Asian region. And then we have Future World, which is our global emerging market strategy, covering not just Asia, but also Africa, Europe, and Latin America. Those are our 4 emerging market funds, which all incorporate fundamental ESG analysis. We also have a global impact fund, which is our quant global strategy, run by Marnie Aragon, who is a quant analyst. And that strategy focuses on global equities, but with an impact bent, identifying companies that have revenues driven from sustainable and SDG influencing products, so products that actually support the UN SDGs.
Tell us about VAM and how you got involved with them, and what the crossover is, and what it means to both firms to this coming together.
Yeah, Alquity acquired VAM in July last year. And the reason we acquired VAM was for 3 reasons really. Firstly, the excellent product suite that VAM had and currently have. So the Driehaus driven US small cap strategy, which is one of the best performing funds in the world. The Atomos, Willis Towers Watson multi-asset strategies. Secondly, VAM's distribution really dovetailed nicely with the distribution we had for Alquity. That's Asia, Europe, Middle East, etc. And we felt that that would be a great platform to actually distribute the Alquity products as well. And finally, the strong operational setup that VAM have in Mauritius, we were able to leverage that and actually build in Alquity's operational backbone there to save money and help us grow the business.
Finally, how are you what's 2025 looking like for both businesses?
Look, this year has, for all sorts of reasons, is going to be a volatile year. And for us, that means we need to be able to be delivering our clients products and solutions that enable them to manage through this year. And we believe with the risk management and risk controls we have across not just the Alquity funds, but also the VAM range that we have and the solutions we can offer, we can help our clients through this year, through quite a tough period. So we're very optimistic for the year. We think this year will give us a chance to really get the message out about both Alquity and VAM and the actual solutions we can now offer our clients, which put us in quite a unique position.
And I said finally, but I want to ask one final question. This 10% of profits that goes
Revenues.
into of revenues that goes 10% of revenues.
Revenues.
Wow, that's different then, isn't
that's
it?
different. Yeah.
Yeah.
You cannot mess with revenues. You can mess with profit. That's why we did it, because a revenue is a revenue. You earn $1, you earn $1. Your profit, you can change your profit by increasing your costs or changing your overheads, whatever it is. So profit is manipulable.
Yeah.
Revenue isn't.
What made you go down this route though? And this is very altruistic, quite clearly, but what, from your background and the company's background, what made you want to stand out by giving this
Look, it's less altruistic than it appears. When you think 10% of revenue, that's a lot of money, and yes, it is. But if you think about this industry generates 45% net profit, net returns, right? So there is scope to actually do that. But also this 10% is also, I also see it as our investment into the firm. It gives us the ability to support the economies we're investing in over the long term. It gives us the ability to go back to our clients and say, not only are you delivering top quartile returns, you're delivering this impact without doing a thing. And this is just business. We are an investment firm to start, and that's our goal, to deliver returns. And if we can deliver returns and at the same time have that impact, what's there to lose there?
Yeah,
it's a win-win
absolutely.
for clients, and it's a win for us.
Well, let me say it's been a pleasure talking to you today, Suresh, and I'm really looking forward to us working together in 2025 and beyond, and we'll be delighted to help you tell your story.
Brilliant, thank you.
Nice to meet you.
I appreciate that.